26th of June, Wednesday, 2013. We're going to take a look at the charts in just a second, but as you are aware, we are first going to take a look at this PowerPoint and explain some of the strategies I'll be looking at. But before I do that, I want to make sure actually that you hear me. I know there are only a few of you today in the room. Maybe the market has been quite choppy, so I can imagine. Already, I got a confirmation that you can hear me. Great, thanks, Bogdan. Cool. So let's just go through the PowerPoint quickly, and then we'll take a look at the charts and talk about why the market is so choppy the last few days. All right. So welcome once again to this live trading room from Admiral Markets. But before we start, the risk disclaimer: please be aware that trading foreign exchange and global financial markets in general is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video and webinar is for educational purposes only. All right, so thank you for your attention on that. So we're going to have this room, as you know. Let's see, Tuesday, Wednesday, Thursdays from 7:45 to 9:15 London time. We'll be looking at my own money that I'm trading, and we'll be looking at breakout strategies especially. We'll take a look at fibs as well, of course, on intraday, swing, and position trades. What are breakouts? What those breakouts are basically these black boxes on the chart. All right. We have a webinar actually, Toronto and I, on breakouts in the educational webinar section, and you can find the video in the archive. Make sure to follow Admiral Markets, of course, on Facebook and Twitter, and check out their great spreads actually as well. All right. So here's the calendar. It's quite quiet. We have pounds. We have the Bank of England Governor King speaking. That's still close to 3 hours from now. Then we have USD GDP, and we have New Zealand as well. All right. So otherwise, a quiet day, I would say, today. So let's take a look at the markets. This is the Euro odd. Euro odd is breaking through this up support line, and seems to be breaking through this support. So just maybe we're going to see a bigger retrace on this Euro odd to the downside. That is counter trend still. I was hoping for the bounce actually of this trend line. The break of this trend line would have been classical. Would have been really perfect. I was hoping to catch that today. Would have loved that trade if we would have made the move up and then eventually break here. I was hoping that would happen today. Nice break here for that upside. But it looks like the Euro odd is actually breaking below this support level as we speak. So it looks like we're going to make a bigger retrace, which is counter trend. So not that interesting for me. I'm always geared towards the trend. But if you love counter trends, then maybe this is something for you. I don't know. No idea, but I'm always focused on the trend. And to me, despite the trend line break, we still have, I would like to see a clear break and then a hook back, and then I'll get interested in shorts again. Anyhow, that was just coincidence that I had it on the Euro odd. Let's just start with our usual pound and euro, okay? And in general, I think regarding the choppiness of the market, as I promised, I think it just has to do really with the fact that it's the last week of June. I don't know if you have, does anyone have a risk management plan that dictates or tells, or where you have documented that you take less risk in risky weeks, risky days, risky months? Because I do personally, and the week of the quarter-end closure, the last week of June, especially because it's the half-year, end of the half-year, just like the last week of December, are more risky. Now, December is a whole different story, but definitely this week is classified as high risk for me. I don't know if I reduced my risk in this week. Does anyone have the same? Because you can see what kind of choppiness there is. I mean, I'm sure it's going to move one day. It could move still today, tomorrow, but the first 2 days were just awful. I mean, just huge consolidation zones, in my opinion. I mean, maybe there was a move or two, decent move, but really, in general, not much. Let me say it this way. Does anyone have that incorporated in their trading plan? The risk, like the risk element of when it's say like better trading and less trading. For example, Fridays are always more risky. If I trade, I take less risk. Does anyone have that? Yes, no? YN would be the answers. You can see here the pound. Remember we were looking at this yesterday. That you know I wanted a break and continuation. Well, we didn't get that here. Or here, I wanted a break and continuation. We didn't get it. There was nothing on the pound yesterday. Right? We were stuck in this sideways move for how long? Till a small break here at 1 UK time and the down break here at 3 UK time, 3 p.m. Otherwise, really nothing. See that? Nothing. Absolutely nothing happened on the pound yesterday. 0.0. No trade to be made. Nothing. But no one has answered my question on risk management. So, I mean, folks, it's really not that difficult. You either have it or not. So it's a yes or no. At least some of you can answer. I know that some of you are multitasking probably. Some of you are not able to write, but I mean, at least two could answer. I want to know that someone is listening to me. Come on. Give me a Y or N. Otherwise, I'm having doubt that this microphone is working. Bogdan has it. Good. And Barta has it as well. Cool. Great job. And Nikita has it as well on Mondays. Okay. Awesome. Perfect. I would definitely recommend it if you don't have it. I'm glad that we got 3 S's and 0 no's in a way. I mean, if you don't have it, don't be shy to tell me. But Marcus, no? Okay, cool. Well, thanks for your answers. That's really cool of you. You know, Sandra's no as well? Okay, cool. There's no right or wrong answer. I mean, in the sense that it's good to be open with the feedback. That's what I meant. Cool. So with 3 yeses, 2 nos. Okay. Cool. Thanks for that. Well, basically what I wanted to say with that is that if you don't have it, I would recommend it because especially first 2 weeks of January, last 2 weeks of December, high risk. August, high risk. Any quarter end, any week that has a quarter end, like end of March, end of June, end of September, end of December. Well, end of December was anyhow high risk because the last 2 weeks of the year are you know, are risky. So quarter end, any month end day, last day of the month, any month, the last day is higher risk. Any first day of the month is higher risk. Actually, even slightly the first day of the week as well, just like the last day of the week. I know it's quite extensive, this list, but you know, there is definitely more risk in the last day of the quarter end closure than the last day of the week, definitely. So they're not all just as risky, but even the last day of the week and the first day of the week are more risky. That's why we have sessions on Tuesday, Wednesday, Thursday. Those are my prime days. Let's see, what else? So month end, last day of the month end, the last week of quarter ends, public holidays, in UK, in the US especially, I would guess, but maybe a bit in Europe as well, and Japan. What else? Am I missing anything, Nikita, Bogdan, or Beta? Maybe you have different things that you look at regarding your risk factors. But I reduce risk on those days. Not always equally reduce it. Some days less, some days more. But so that's that. So you have an idea, Sandras and Marcus, you know, how you could, which days you could do that if you wanted to. I would recommend it though. Okay. So let's move on to take a look at the London Open. Seems quite fashionable for the pound to break at European Open nowadays, and that was today too. You can see that the high and low of 5 to 7 a.m. Was again a very tight range, which is normal, but we got a break here. So that is invalidated. All right, the GU London Open is invalidated, like we've seen many times, but what can we do? From a technical point of view, Bogdan is thinking that the pound would drop. And I think you have a point. But it's not, in my opinion, it's could be a small drop, maybe. We're bouncing off this 50 fib here of this up move. And I think that any of these fibs, 786, 886, could give a higher move up. That's because I think it could be a good 5-wave structure here, and we could see an ABC like that. So there could be a small fall, but maybe then a rise as well. All right, but that's it doesn't have to be. The sell is good because it makes sense because we're in a downtrend. Even if we bounce off this level, it's a good trade because there is some space to the downside. So the idea is good. I like it. It makes sense to me. We have 3 minutes still to London Open. And if we look at the current price action, we are again in the sideways move here after this sideways zone. And the 1 hour has a wick at the top, the wick at the bottom, so no clear price action there. Let's see, 4-hour chart, nothing special. The day chart, nothing special either. I mean, it's just, if you look at it, bullish, small bullish day on Monday, small bearish day on Tuesday, and today we're kind of close to the low of yesterday. So, that still could be a resistance level. It's always dangerous. Lows and highs, as I've been saying many times, always dangerous, right? So that would still be a nut to crack at 153, 154 basically. Yeah, definitely booked down. I agree. Regarding that confirmation, I want to sign a confirmation before downside. Yeah, I agree. It's tricky. We got sideways zone, daily low, and then these fibs. So there is a small space in between here. It's not much. It could give a small bounce and keep on going. That would be great, but not much space. So, yeah, I mean, if it were to break this daily low and make a hook back to it, and then I could be interested because then there's like some space to this 153.70. There's like 30 pips, so that would be a lower risk entry to me. Maybe it depends on price action as well, or if we get a break, hook back, and continuation, something like that. That could be a possibility too. Those might be things that I'll be interested in on a lower time frame for a small intraday trade on a 15 or 5 minute. So let's keep an eye on that. Not sure if it will happen because if you look at yesterday, it just went sideways, didn't it? And that might happen today as well. So let's see. But that could be interesting. Let's take a look at the euro. Euro, so the same thing basically. That too, small bullish day up. Yesterday, bearish day. Let me get rid of some of these lines here. Here too, we're at a talking spot. We're about halfway that up move. It could easily bounce here. It could easily maybe still make a fall and then a bounce. It's choppy. It's just ranging here a lot. No clear direction, and we're back basically at the mean. If you look at the last price action since November last year, there's like an average right in the middle around here, as you can see with peaks under it and above it, all right? But about the average is about right there. We're right about the average. So, we would have to break this low in any case for any down move. We're right at the 618 fib of that entire move up. All right. So if we break this double bottom and 618, there could be a good fall to the 786. All right. If we break this top, then maybe we're making a bigger correction to test this top again. All right. You'll see this constantly. Basically, what the currency boils down to is that it's moving from one level to another level. It's just basically, it's just basically testing tops and bottoms, and if it can't break it, it's going to bounce off it, and it does that often. It does bounce often off these tops and bottoms, and eventually we do get a break to a new zone or level. All right, and you can see that in terms of edit waves or however you look at the market, but that's how just the market moves. It moves slowly and then impulsively, slowly, impulsively, slowly, impulsively, and it moves from one level to another. And if you can see that support and resistance in the market and judge what is the trend and focus on waiting for an impulse in the direction of the trend and waiting for the next break with the impulse with the trend, those are the most safest trades. All right. In this case, we have an impulse down. We have a downtrend. So a break of this bottom would mean that support is out of the way, and would signal a good likelihood of continuation of that impulse and trend to the 786, which would be the next most natural support level. That's why I like that trade. All right, because there's no support close by. Otherwise, I don't see anything in here. I don't see any major level that I should be careful of, except maybe 130, the psychological number. But that's still, far enough away from these bottoms. All right, and we have a trend, and we have an impulse, 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 impulse. Okay, so that's why that would be interesting indeed. The upside is counter trend, and if we do break this top, it could move up, but it's less, it's more risky unless we make a real nice impulse up here and then start to make a kind of a correction like this. Then the next move I would be interested in. Does that make sense? Does everyone see that logic? So I'm always focused on the most safest part of the trade, which is like the middle 50%, between 25 and 75% of the move, kind of, or between 20 and 80. Maybe you've heard that more often, that more traders, with the trend traders, are not really focused on the reversals or necessarily the last piece, but more in the middle part. So that's, I think, the safest, and it's not as easy as it seems. Keeping your mind focused, I've said this more often, keeping your mind focused on with the trend trading is not that easy, actually, because our mind automatically wanders off to expecting reversals or not expecting continuation. At least that's how my mind works. I think the most have the same, that we are more looking at counter things, I think. Maybe you don't have that, but alrighty. So that would be interesting. Now, how to trade it, that's a whole different story, right? But an important story. So let's see. We're kind of making a descending wedge here. That looks good. So I think looking at this 1 hour chart, let's see. I think I would want a close, a 1 hour close probably below it, and then a retrace of that next hour, and then that would probably be a good short when we hook back maybe to this bottom approximately, or the always classical break, pull back, and then wait for the continuation, right? That's another way. That's a bit safer. So those are the things, just like the pound, that makes sense to me. So let's keep an eye on this. It is an interesting position because we are close to breaking. There's definitely a realistic chance of breaking, and yeah, that could be an interesting setup. let's see, yesterday. Yeah, yesterday I didn't like it because we had this 1 hour bullish candle, remember? And we had 1 to 3 hours down more or less. Then we had 2 hours up. And this is important, by the way. That, then it was time actually that it could fall because that bullish price action was out of the way. I've noticed there's a video on time factor, and it's in the archive of Admiral Markets. Let me just quickly go there actually. Education, go to webinars, and go to video archive. And there is somewhere the importance of of time in your trading. The 5th of February, 2013. That is, an important thing in trading. Not only is trading about price, but also about time. And you'll find some useful clues. Maybe you knew them already, but I think they'll be definitely interesting for your trading. So take a look at that archive, and take a look at that video, and I think that would be worth it. All right. So why is that important, the time factor? Let me go quickly back to our chart now. One thing I wanted to mention, by the way, you can see here, if you just go to home, by the way, you can see here the spreads, by the way, right, of the currency. So take a look at that. They're really, really awesome spreads. Okay, just wanted to, fair enough, I think, right, that Admiral Markets is hosting it, and I just want to, make you aware of those great spreads. All right, just go to the home page and you'll see that. All right, anyhow, that's what I wanted to tell you. Oh, there's one question: how we can download the webinar. Sorry, folks. Let me just answer that question, okay? Or try to answer it. Let me say it this way. I think you just press on play here, wouldn't you? You can see the video like this. All right. I don't think you can download it. It's probably not downloadable. It's probably just you can only watch it, I guess, on the website. All right. Now, why is that important? Because I noticed that if you don't break a high or low within 5 candles, then the likelihood of a break is severely decreasing, and the likelihood of a retrace for 13 or more candles is significantly higher. All right? So we had here 1, 2, 3, 4, 5th candle couldn't break the high. What happened? Boom, downside. All right? So let's see here. 1, 2, 3, 4, 5, no break. All right. Now it's not like it's a rule that always is valid. It's a bit arbitrary. It is discretionary, but it is a good guideline. It gives me an indication when the break, when the break happens, it's normal. Let's say within 2 hours, perfect. Within 3/4 hour, if it breaks, then that means that I have the patience to wait that many candles. I don't get nervous if the next candle didn't break the high or low. So that gives me patience and discipline with my trading plan. Okay. But if the 5th one doesn't break, then I get a bit worried. All right. Let's take a look at the ASEAN. This is a good example of the euro dollar, right? Because we had that bullish price action. But it was, as I said, we had bullish price action, but in a downtrend. All right, I don't like that because we could make it up move, we could make the down move. Price action isn't looking down, and that's what we got. We got nothing. It did nothing, right? That's what happens when you have bullish price action and a downtrend. But if you look at ASEAN, just to show you, where is it? I don't have it. Okay. 1 second. I'll just add it. If you look at ASEAN and look at the day chart, 1, 2, 3, 4, fifth day, couldn't break this low. Look at this. Couldn't break. Sixth day, found support. We got 7th, 8th, 9th, 10th day already. Didn't go anywhere necessarily. So, I mean, because it's in a downtrend, we didn't find much upside. So the whole correction is more of a sideways chop than a real retracement in terms of pips. Sorry. But you can see that the 5-day rule here means that we didn't get that downside continuation. Right? Another great example is on the Aussie. Let's see. Aussie dollar right in here. This was a classical example. We had a very bullish candle, right? Very bullish candle here, right there. And that looked like, was begging for continuation in a way, very bullish price action. But we were at a major resistance level, right, 106. So what do? Well, then I didn't take a short, but especially not after this, and we didn't have a massive bearish daily candle after that either, right? There was no clear reversal sign. But look at this. 1, 2, 3, 4, fifth day, couldn't break it. Look at that. More closely. This is just the inside candle. Nothing wrong, right? Small candle, nothing wrong. Then we got that bullish continuation. So if you're the bull, you think, oh, that's a great day candle, right? You have a good upside, small correction, continuation. All right? The next day, you expect a continuation, but we don't get that. We get actually a move down and up, but still, maybe as a bull, you're thinking not that bad. Big wick at the bottom, bullish close, so tomorrow we'll get the upside. The day after, yet again, disappointment because we couldn't move up. We get a bearish day. Fifth day, couldn't break this top. Down we go. Bigger hook back, and it's actually a total retracement reversal to the downside. This was actually the first wave down. Then we got a bigger move up, and then we got the massive fall on the Aussie, right? So that's time factor. Anyhow, so that was yesterday, euros and pounds price action, and also, the idea, trading plan, more or less for today, or for this session. Let me say it this way, for my trading plan for today's session. Let me just quickly answer two questions, okay? Bogdan, I don't know why they're not always online, those videos, to be honest. This one looks to be okay. This one too. Is there anyone in particular that doesn't work? Because let's see this one. Okay, Bogdan. Sorry about that. I hope maybe write an email otherwise, okay, to customer service about that. Then one more, Vitatas. You do see it correctly indeed. I think that's true. There has been a lot of sideways price action, I think, in London. So I tend to agree with you on that one. I don't know. That's probably just coincidence, to be honest. I don't know what is better. Maybe it is better to move the session a bit later. I mean, it is tricky. The market is always a bit stuck, because everyone's maybe waiting for the first move, others for the first move. So it always takes time before the market gets loose. You know what I mean? Like sometimes it really takes long before there is a movement. There's always some movement on a very small time frame. like, look at yesterday. I mean, it's not that we didn't move. We went up and down here between a 30 pip range, right? But in general things, that's really small, right? So that is typical from London Open, that it does, like the first hour, it does take a bit of a warming up, I guess. But I did notice that too, Vitetas, that we got breaks a bit later on than usual, maybe in June. Also, if you look at the bigger picture, for example, on the pound yen, and many currencies have this actually, it's quite choppy. I mean, look at this zone. Look at this zone. Look at this current zone. Very choppy. There was, of course, a heartbeat in between, where we had a pudum pudum, up, down, down, up, down. But very tricky. So what I'm looking for is keeping an eye on these trend lines here. A break of this top line or a break of this down line, basically, in this wedge, or the smaller trend line maybe here, the small trade in here for the pound yen. But very tricky. As even a break of that trend line, still want to see a break of these tops, to be honest, because it's just a sideways box here at the moment, right in here. It's quite a massive box, and a lot of these sideways ranges are existing on the currency pairs at the moment. All right, so you can see any shorts in here and any longs in here are good. I didn't trade it that way. If you did, then great job. I'm always more focused on breaks than bounces, but in some cases, bounces are probably better. Alrighty, so that's the pound yen, but that's quite easy analysis actually. Those three trend lines are enough for me at the moment, and these horizontal lines. Something like this. So those are major support and resistance lines in my opinion. So we have some space in here and some space in here. So let's see how that goes. So that's the pound yen. Hi, good morning, Alcana. Good to see you here. Well, it's a bit different. Just a quick answer here to Alcana, okay, folks? It's a bit different because I'll be looking at trades I take myself as well. We look at intraday trades and swing and position trades and more currencies. All right, great stuff. So euro dollar still going sideways. Let's take a look at the pound here. Pound is making its usual up and down on the 5-minute chart. So that wraps up kind of the euro dollar. We take a look at the pound yen. Does anyone have a preference now? Because to be honest, I don't really like anything that much at this moment. Nothing is setting up that I like a lot. Maybe the EuroCAD is something I had really, kept an eye on. I'll show you why. EuroCAD is just in a massive uptrend on the day chart, 4-hour chart. You can just see. But we hit the 272 target. Okay, we actually broke out of this trend line here. We moved up, bounced off it twice. Can you see that? Wait, 1 second. Up move, bounce, up move, bounce, now a break, right? So we broke out of that trend line finally, and we actually even broke out of this support here, right? Or, well, on a day chart we would, not on the weekly, I guess, just a wick above that, but anyhow. We have also a great trend line connecting these bottoms here. So that was a great up move. I mean, we've been trending up here since the summer 2012. Of course, we had some nice down moves here and here maybe, but otherwise upside. So if you then zoom into the day chart, we're actually looking at this last break on the weekly, okay? And you can see we had a bit of a struggle here, break, we broke through, hooked back to the same trend line here, and then made another break. And if you probably would have drawn the trend line a bit differently and do something like this, you would see that we had here maybe another break, right? So here this was kind of like a break to the next trend line, hook back, and then the second break. Here too, it's like a break, pull back, continuation, right? You can see it on all time frames, on all levels. So basically, we have a 382 or 236 bounce, and the target of that, in my vision, how I use fibs, there's also a webinar on fibs, right, is the minus 0.272. And that's what we hit 3 days in a row, and we couldn't break that level. That's not surprising, all right? That happens. Now, it depends what kind of correction we get. We can get a sideways move for 4 days, hopefully not more than 5, though, as you know, because of the 5-day rule. And then, or 5-candle rule, continuation to the 618 is very likely. Or we can get a more aggressive retracement back to, like this, for example, back to a fib. You know, we could see something like this. Sorry. And then a move up. All right. Now, there's always in trading a risk that at the minus 272 you change gears. There's always that possibility. There's nothing you can do about it. So this trend could be over just because we hit this 272 target and we make maybe a bigger correction all the way back to this trend line. You never know. But considering the fact that we hit a very low fib, that would be definitely true if we hit a 786 or 886. Then this is actually the target, and I wouldn't expect more. All right, but we had a very low fib. Then the likelihood of the 618 target is very high. And any move back towards this support level should encounter support. Yeah. All right. So I would feel okay with that in that regard to fib this move up. All right, just playing around with the fibs. But looking at the impulse, it is quite impulsive. So, you know, that could, looking at this current situation, just because it looks like we're breaking actually this kind of mini base in here. Does everyone see that? There's a kind of a mini base right in here. We're breaking that right now. So, you know, that could signal a bigger retrace, something like that, to the 618 maybe. Let's take a look. So this trend, because what I was looking for basically on the 1-hour chart, let me now move in. That was the day chart. Let me move into the 4. What I was looking for, because it was such a big uptrend, what I was looking for was a break of this beautiful trend line. It has 5 hits. And I was really hoping that we would get a push up and a break like that. That would have been a great with the trend trade, just like the euro odd. But it doesn't look so. It looks like we're going to get a bigger retracement here. So nothing you can do about that. If there's no trend continuation, that's life. What can we do? All right. Now for Alcana, maybe if you're in this trade to the upside, just like me, what? Well, one way of treating it would have been to move it actually under this level, so you can either if you don't like the trade, click it out right now and take a small profit. And it depends on how much risk you took. If you took a lot of risk on that trade, I wouldn't want to live through it personally. If you just took a normal risk, or if you took a lot of risk, Alcana, you could click half out or something like that. If you took a normal risk, like I don't know, anything 1% or lower, it could be okay to live through it, and there's a high chance that we're going to bounce. If you took more than one, especially like 2%, it's already quite decent risk. I mean, it's quite high. Then it's up to you. But anything above 2, which I don't recommend, by the way, but that's putting a lot of risk on the trade. I don't know. Then I would rather just take it off personally, if I were you. Okay, you took no more risk. Good. Alrighty. So the only thing I'm thinking of, by the way, is how about if I did my fibs wrong? Because to be honest, if I look at this fib, this movement here, we got a 618 bounce, and we came pretty close to this 618 target. So that's the only thing I'm thinking of. Let me see. Although if I look at the 4-hour chart, then to be honest, even here, looking at the oscillator, this looks like one leg. So I think the fib is correct, in my opinion. I think it is. We're also reaching the 0 line here. So I think we should see a bounce at the 3250, which is kind of this broken top here. You see that top? This bottom here. So I think those will still act as support, and any down move will encounter support, and we'll still get that break later on. If we don't get that bounce and break, let's say this week, I would say, let's say today's Wednesday. So if we don't get that by beginning next week, then I probably will question the trade and might take it off for whatever profit I have, or maybe even a small loss. I don't know. I have to see. But at the moment, I feel confident, and if it's a normal risk, then I think it should be okay. Because look, we did the same here, right? We broke, hook back. We break, we hook back. This could just be a bigger hook back to this level, and we're going to bounce. Even if we're in a downtrend, we'll probably see something like this happen. Right? We'll have a higher low in here before breaking this bottom. So if your stop loss is there, where I have the red circle, then it should be okay. Now you never know; it's never a guarantee. But this is how I'm going to trade it, at least. Okay. So that's the EuroCAD. Unfortunately, that was really something I found interesting, but isn't materializing. Just like the Euro Odd, Euro New Zealand, those are all waiting for nice breaks, but they aren't happening. What can you do? All right. So those things are really not that interesting for me. I mean, I was really hoping that today would be such a day, but sorry, no such a thing. Maybe there are some pairs we can look at that I find interesting, like the Swissy, Pound Swissy, Dollar Swissy. Let's see, Dollar CAD we can take a look at. Indeed, Vitatus is asking about that. The Aussie, New Zealand, so there's some stuff we can look at. The yen's not that fond of them, just like the euro and pound and commodity crosses. But there are a few others that definitely could be interesting. like the odd Swiss, odd CAD, dollar CAD, pound Swiss, dollar Swiss, stuff like that. Even the odd yen I want to show you. Oh no, we already looked at that. Okay, cool. So that would be the program for the remaining half of our session. Euro is getting a bounce, which doesn't surprise me. I had a, to be honest, I'm a bit biased to the upside here at the 618. I didn't say so because I don't think it's that relevant, but still, you know, looking at the fact that we made a 618 bounce here, I think that could be a bouncing spot for more retracement. But if it does break, you know, it's interesting. So let's see. What's the pound doing? Still nothing. Okay, good. So let's take a look at the CAD. I do trade the CAD indeed, Vitatus. It does look like we can get some consolidation indeed. So here too, we had a nice break. Like this. And a massive weekly candle. Good uptrend, right? The thing is that somehow it doesn't surprise me that we're getting some respect here, because we had such a big up move. We had a pretty big wick here. You see that on the daily candle? It's not a pin bar, but it is quite a, you know, a decent sell-off here. So it was a probability that we wouldn't break this high and first make a retrace just because of that wick. That was a chance. All right. So with that said, a retrace, for example, maybe back to the 382 fib and back to these tops right in here. It's definitely a probability now, right? We still have the daily low right in here, and here are tops as well. So the 382 and 50, both of these fibs tie into tops, all right? And that could be definitely bouncing spots. This down move I'm not interested in. It's counter trend, and it could turn right at this double bottom low of the daily low and turn to the upside. We're only 15 pips away from that low. So that's not interesting for me to go short. It's not that interesting to go long either, because we're showing downside momentum. I don't want to necessarily go against the momentum, all right? So I'm in a wait and hold mode. If we do bounce here and we break this high, that would be interesting upside. If we do break to the downside and then bounce off one of these fibs, then I'm very interested in that upside continuation. That's where I get interested in. All right. You can see here wicks as well, and no power, and we're moving down. Alrighty, that's all I have to say on the dollar CAD, to be honest. Nothing more to it, actually, in my opinion. If you just add a fib here, you can see we went to target, right? 618 bounce, right to target. So if we do break above this, if we do bounce on this fib, let's say the 50 or 382, look at that confluence at the minus 618 and minus 272. And you'll see this often, that you know, the confluence is between targets. Retracement bounce to target, retracement bounce to target. And often these fibs are at confluences. These fib targets are, by the way, also quite strong areas. So if you see the currency struggling at this area, and you see on a lower time frame kind of divergence with the last push up between these tops, for example, you know, and then you see really struggling and some price action that, you know, this thing is then make a sudden fall, and you get a smaller hook back, those are actually interesting areas to take a kind of counter trend short. Not that I do it often. I don't like counter trend, but at targets have the advantage that they're one level. Fib retracements, you have 6 of them. You have the 886, you have the 786, you have the 618, you have the 50 fib, you have the 382 fib, you have the 236 fib. There are a lot of areas where we can bounce off. The target is only one level. Well, there are multiple targets, but I mean, usually they are, let me say it this way, they are sometimes a retracement fib just, if the fib, the way you fib it could be wrong, or you do sometimes even go pretty fast through a retracement fib. That happens less with targets. I think that targets are even more reliable than retracements, in my opinion. So that is always interesting. It's definitely counter risk. It's high risk, but if you see a currency struggling at a target, it could be a very interesting way to catch a counter trend trade there, like that. It's definitely high risk. And what you can catch is maybe something like this. So if it really doesn't do much, because it's just making a bull flag, all right. So if it doesn't do that, if it doesn't move down much, then just take it off or move it to +1 fast. But sometimes, because that happens often, and then you get a next break, right? But sometimes you catch one of those impulses, and then you get a correction, and then one more impulse, and then you get maybe the bigger correction, continuation. All right. All right. That's just a tip in between. So that's the CAD. Let's take a look at the others. Wait, Chris has a question actually on how to follow the trend with fibs. I don't use fibs for trending to decide the trend. Let me say it this way. So that's not how I approach it. I use higher highs, higher lows. All right. Let's see. What else do I really use for trend definition? Well, moving averages, I would say. I use trend lines, higher highs, higher lows, lower highs, 4-hour and day chart. I guess that's it. That's what I use for trend definition. Moving averages, trend lines, trend channels, higher highs, higher lows on multiple time frames, 4-hour and day chart. But I do use fibs once I'm in a trend and I've identified a trend. Then I use them on all time frames to identify where the trend could continue at what place and where the target is. So then I use them. If it's not trending or that time frame has a range, I don't use it because fibs are very useless in ranges. Then I would zoom out one time frame and then maybe I would see that range is actually a consolidation. For example, here on the 1-hour chart we can see this is a range. So I wouldn't fib anything in here. But if we zoom out, or we don't even have to zoom out, but if we zoom out, then we see that this range on the 1-hour chart is actually part of an uptrend. And then I would gladly fib this move up. So I'm fibbing the trending part, but not the ranging part. All right? That's just some explanation here regarding trends, okay? It's very important. It's a good question, Chris, because defining the trend is important. If you can't define the trend, that that's actually, I think, if there's anything that is important, that in my opinion, it's that. At least how I trade. I know that there are other people who turn onto the trades maybe differently, looks at pivot points and stuff like that. Maybe it doesn't need a trend that much. But if you trade like I do, it's important because either you're a range trader, either you're a trend trader, or you're a breakout trader. In all cases, the first step you have to do is you need to identify is there a trend, and if so, what it is, and when does it end. So even it doesn't matter if you're a range or a trend trader or a breakout trader, bounce trader, you need to know if there's a trend or not. And if there isn't, and you're a range trader, then you can trade. If there is a trend, and you're a breakout and you're a trend trader, you can trade it. And if there's a range and you're a trend trader, then there's nothing to do for you, right? And if you trade both, well, then you still have to identify it, right? So it's very, very key. So let's take a look at Chris's question regarding how do we see if the trend is changing. And that you can use chart patterns, double tops, double bottoms, head and shoulders. You could also identify, for example, if you get a impulsive move, counter the trend, right? So you're in a trend like this, and all of a sudden the downside correction is not weakish but strongish, all right? And the upside is all of a sudden a corrective nature. Well, that could signal the sign that at least you're going to make one more correction, if not a trend reversal. You can use major support and resistance levels on week and day charts. That's where normally trends end. Divergences on day and week charts, or day charts and 4-hour charts. For example, the euro-yen here. Let's take a look. Classical example here, where we had, for example, this massive downside divergences between these bottoms, and we had uptrend channel change. All right, trend lines, breakout of trend lines. All right, for example, we broke out of this, maybe this trend line here. All right, we broke, hooked back, continued. Then we have a new trend line, and we never broke that. We bounced off it. We kept bouncing off it. Okay, we have to maybe adjust it here a bit, but you get what I mean. All right, highs and lows. Once we break, for example, this high, with higher lows here and higher highs here, you know, that's the confirmation that we're changing gears. So the first thing would be definitely divergences and any strong price action candlestick formations like engulfing twins, right? The second step would be trendline breaks and moving averages breaks then eventually. The third step would be basically breaking the structural highs or lows. Fourth step would be making higher highs and higher lows, and basically making a trend channel to the opposite side. So the first signal are really candlesticks, divergences, chart patterns, and key highs, key lows, key trend lines, all that stuff. All right? But the trend, in my opinion, I define the trend on 4-hour and day chart. You have to know what time frame do you use for your trend definition. I use 4-hour and day chart. If you remember Talantala, he was talking about a 1-hour chart, a beautiful downtrend on the 1-hour chart. I don't consider 1-hour chart a trend, but you could. Nothing wrong with that. But I don't. Like, look, the euro dollar here. It made this down move here, right? To me, that was a retracement still. All right, because I consider the 4-hour trend, which was up. 4-hour trend, day trend was up. This retracement. But if you have a 1-hour trend view, then this was already a trend down, right? So it all depends also on your time frame. You have to be aware of that. Okay, cheers, Alcana. See you tomorrow. All right, have a great day, okay? So, oh, no, Bogdan, I'm not saying goodbye to you. Alcana said that he was leaving. So I wanted to, no problem. I wanted to wish him a good day. So, you know, defining the time frame is important as well. No problem. Well done. So, is this interesting? Does this make sense? Any other questions? I know it's a bit off topic. I know it's not currency related analysis, but I use all of these tools for my own trading, and I hope to, you know, I hope I should be using them as well with you here. Not always is everything. Sometimes it just takes long for things to set up. I mean, this is a range on the euro pound, right? So once we've discussed this on the daily, it's going to take a week or so before anything substantial changes on this, right? So let's see, the euro daily, maybe the euro odd, because Chris, you were talking about trend changes, right? So this could be a good example actually, because we're having a massive uptrend, right? And looking at this, there is, if you count all these waves, maybe not the euro odd, but most of them have divergence between these tops. So that was already a first signal here. Here, for example, we had an aggressive move. So this already worried me a bit that we could get a down move. But still, I wanted to focus on the trend because you never know, you could get that continuation as we did. But this move down is also pretty steep here. And we could see finally, just looking at the huge uptrend, finally a move down. So divergence, the fact that the AO is turning here as well on the day chart, the divergence on the 4-hour between these tops could be a first signal that we are changing gears. All right. Let's see, anything else? We're breaking out of this trend line, right? We are making we're breaking this low, which means we're making now a lower low after lower highs. That's why this low is important for me. So we're getting in that regard, slowly but surely, a trend change. Well, I wouldn't be really, the most interesting for me would be if we finish this, make a bigger hook back, and then drop, because then we have a kind of a bigger head and shoulders pattern. All right? That's when we really change gears significantly. All right? With the neckline, the blue line. So there's still a lot of things that have to happen before you really get an effective trend change here, I think, personally. But sometimes trends change faster than I expect. But most of the time, being cautious helps me. Let me say it this way. So there's a lot of turning to do before we get that downside, I think. But this could definitely be the first warning sign that the upside is over. All right, we're getting, in my opinion, the first warning sign. Now, it depends on your definition. I'm sure that some people are already trading this right in here upon this break already to the downside, or maybe even some in here. But that is really, for me, too early. That's too early. I really want to focus on with the trend trades. So anything here is still too early for me. Even this one, as I said, is too early. Although I could understand that some do trade this to the downside already. So that's about it. Let's see. Let's take a look at the other currencies, okay? Got 25 minutes left, so should be able to take a look at that. Bogdan's asking about gold. We'll take a look at that. And the others quickly. Let's see. The pound Swissy. I think I talked about it already, but we're in this trend line and this trend line, kind of like a wedge. Within that wedge, we have a downtrend channel that's very choppy, though. So we're back at the top of that channel. So that could be a resistance spot. We could fall back down to the support line. And then is the question. That is really the talking spot, because the space between this downtrend channel and this wedge is narrowing. The currency doesn't have much space to maneuver. We are going to see a break one way or another sometime soon. It's going to be a break either to the upside here, back to the higher trend line, and then maybe again down, and then maybe a break. or a breakdown, or we're going to see a break and a continuation of this downtrend channel, right? So it's an interesting talking spot. So I think I already mentioned it, but I like this pound Swissy just because of that. Very nice talking spot. All I need is these trend lines, and once we start to break out in one way or the another, then I'll put fibs on back and see what the targets are. That's about it. But you can see what a massive, just a massive consolidation zone here. Nothing special, but if it does break out, then it will get very interesting. Looks like we are respecting that trend line again, right in here, starting to attempt to move down. So actually breaking these lows right in here. So that it's not a type of consolidation I usually trade, but that could be a potential of falling back to this trend line. So that could be interesting right now even, right? For this fall right to the trend line. Or maybe somewhere in here. That's the pound Swiss. Let's take a look at the dollar Swissy. Let's see. Dollar Swissy, massive down move. We found some bottom here. We had 1, 2, 3, 4 days. We couldn't break this low. Then we had a 5th day that was bullish. Well, that was in a way a obvious sign that this is going to correct a bit more. So one of those targets that we could look at is the 382 fib. It was right in here. We're pushing above it now, so maybe the next one is the 50 fib. If we then zoom into the 4-hour chart, you can see that in the 4-hour world, we're actually already building an uptrend here. And if you connect the bottoms, got a nice upward channel maybe already building. It's tops like this. Maybe it's quite narrow, maybe this channel. But that could be a good channel for the upside, up to the 50 maybe. And if we get something like double top here, and a break of that trend line, then we can move down. All right? That could be still a good fall there. Or we still have to be careful of anything that is like this. If we do move down, even if we do something like this, up to 50 fib, then down, because here could still be support for bigger correction upwards, right? So let's see, anything on the 1-hour chart? Looks like we're making a bull flag here, so that could be interesting, or a triangle. A break of that triangle could be interesting for continuation to the upside. All right, that's dollar Swiss. That doesn't look bad. Same like yesterday, actually. Look, consolidation, break. That break happened in New York, beginning of New York, I think. Open of New York. Right in here. So that could happen today as well, maybe. So that's the dollar Swiss. Let's take a look at Aussie and New Zealand. Or let me take a look at Aussie, and then we'll take a look at gold, and then New Zealand, maybe. I don't want to have book down waiting too long. Or let's take a look at gold right away. Otherwise, gold, XAU USD. We had. Remember, I was talking about at least 2 bottom breaks. We had one. Now we had the second. So that has already been fulfilled. So that looks, no, that downside has indeed happened. Let me say it this way. So I hope you managed to get some good trades there to the downside. In the meantime, we have hit 1250, and to me 1250 was always somehow the magical target that I had designed for the gold USD. So to me, I've reached the long-term target on the gold to the downside. Doesn't necessarily mean that it can't fall to 1100. It couldn't fall to 1200. It couldn't fall to 1150, or it couldn't fall to 1000. Definitely can. We're going to take a look at that right now. But when I was analyzing it let's say back in 2011 and 12 and 13, ever since this fall, I've been bearish on gold. And why? This is actually a good one for Chris, if he's there. Yeah, we had a massive uptrend, but we had an impulse of down. To me, therefore, all this move was corrective, and I expected the one more fall. So that was one of the reasons why I expected that trend change. All right? That was the reason. As I said, one of the reasons is impulses. This was an impulse. So I expected a continuation of that. Now the thing was that I expected it, actually, personally, I expected it to happen. We had a three-wave here, and I expected the break to happen in 2012 here, like this. Well, we got, that's always happens, that sometimes corrections get expanded. We moved one more move up, and then we fell, right? So as I've said here before, this fall was awesome for me because I was catching it all the way down. And the funny thing was I had to laugh when I told you already, for those of you who were there, I had to laugh when Goldman Sachs changed their outlook to bearish right in here 2 days before it fell. So it was probably somewhere in here actually. Because I was thinking, like, what are they doing? This had bearishness already and all over it already for 2 years, in my opinion, and especially with this down move, in my opinion. So I didn't know exactly what they were doing, to be honest. But so I was trading this all the way down, and this break, fast, sudden, was definitely what I expected. And as I said, already with us together, I think, let's see, we started beginning June together. This bottom is going to break. This is definitely a very impulse. It has to break. The question is only from when. I thought maybe from higher, but we didn't have any energy to the upside, and eventually we started to move down, and we got the break of this bottom. And I said we're going to get one more break of the bottom, which happened again. Anyhow, my target was 1250 all the time. All right, that was the 618 target, and this high in here at 1250, right in here. And it's like, I think, a 382 fib of the entire up move. That was my target. When the currency was in here, I was thinking that could be the area where we fall to and then bounce. Right? But the funny thing is that we've moved so far that there's nothing says that we stop right here. To be honest, it's 1238. It just keeps on moving. That was a very long-term target. The reality is now that we've actually made, let's see, this could be, to be honest, we could still make two more ups and downs, up, down, and then turn. So I'm adjusting that analysis as well as we go along, of course, right? But that's definitely possible. Another bottom break is definitely possible, probably two bottom breaks. If I look at this setup. I'm using wave counting here, all right, by the way. And I'm looking at all these as 1-2s, or at least 1-2, 1-2. So one bottom break seems likely, if not two. So wherever this bottoms out, wherever we make a correction like this, there'll be one more bottom break probably, in my opinion. So 1250, although it was a good target, right in here, it seems like we're pushing through it. Wow, it's just so bearish, isn't it? It's amazing to imagine, though. I mean, so many people probably buying it here up in 1700, and it's at 1240. It's difficult to imagine because we're so used to gold lately, the last few years, being up above 1600. Difficult to imagine in a way, psychologically, but it happened. It's amazing. And who knows where the bottom really is? I mean, if we fall, maybe the next level really is this 50 fib. I mean, that would still be all the way down at 1100, more or less, 1080. Wow. All right, so maybe that much fall still left before we get a bounce, a bigger bounce, and bigger correction upside. All right, we had this fall, right? We're looking at this fall here, nice fall, small correction. Just recently, last night, fall, then a very small correction. We're pushing again, and that's all just within this, still this fall here. Let me go to the day chart. This one fall, basically. Man, this day chart is 1310 is the top, 1240. It's $70 fall just today. Crazy. No, nothing's stopping it at the moment. So, you know, anything maybe that now I wouldn't do it, but anything that hooks back maybe to this area could be again a good fall. Not sure, to be honest. I wouldn't touch it now. Either you caught it here, or you caught it in here, or you caught it in here somewhere. But I wouldn't be trading it when it's on the move like this, personally. But that's me. I like to catch it when it's about to turn or it just broke. But impressive, very impressive. And looking at the speed that it's moving, looking at the power of this move, if this stops anywhere around 1200 and we get a retrace, another fall to 1150 and 1100, why not? It's a massive downtrend. It's difficult to believe, even for me, because I thought really 1250 was already like a tough selling pitch. Imagine if I would go on CNBC and say, here, October 2012, I think gold is going to be 1250. You know, not too low, somewhere 2013. You know, I think you'll be laughed at, I think, personally. And now we're talking about, you know, looking at the fact that 1250 would be hardly doable, hardly reachable, right? Now 1250 not only hasn't been reached, but it's probably going to be broken, and we're probably going to go lower. Amazing. And the likelihood of 1100 is increasing. All right. So let's move on to quickly the dollar index. We got some upside continuation here. All right. Nothing special. Kind of mirrors the euro and dollar and pound dollar, of course, right? So kind of halfway, just like that euro and pound. It's a bit difficult, right? Alrighty. Let's take a look. Aussie, New Zealand, not doing much. Could be interesting though when we break this trend line here. But I want a good break of this bottom here as well. We're at a trend line as we speak, so it's a break or bounce moment. I would like the downward break more. Upward break would be okay, but I would first want to see the break and then see a smaller retracement and then take the next break to the upside. But because we're still in a bigger downtrend, a break to the downside would interest me more, but I'll still be careful of these support levels. Let's see, what else to look at? Aussie dollar, yeah. The AO is important. Chris is asking how important is the AO in my analysis, and it is very important. It is definitely one of the main things because I use it for LED wave counting. I use it for swing high, swing lows. What is a swing high, swing low? I use the AO for that. I also look at if we reach the target. So two things. Do we reach the target? What is the AO? For example, if we have this move here, you can see the AO was at the zero line, moved up, and then retraced to the zero line here. So this is a swing high, swing low to me. Why? Because of the AO. You can also use fractals. You could say, okay, I fibbed this one, we went to target. But if this move up was actually probably on the 50-minute world we had a on the AO an up and down. All right, so this is more a 50-minute fib in my opinion. All right, so the 1 hour fib would be this. Now here too, we look at this example here. The AO went above the 0 line and back. I wouldn't fib this necessarily because it's still part. We didn't go to target. We didn't reach the target yet. We are still ranging. This is a range, so I don't want to fib within the range. So the fact that we reached the 0 line here doesn't mean that I'll fib this. So I use both. I use targets and AO, and a combination of them to decide if I fib it or not. That's why I have the fib on the left, but I don't have the fib where I have the red stripes. Once we reach the target, though, here, the whole story changes. Then, we can wait to the 0 line, and here, officially. Sometimes I do fib it earlier, though. All right, so we can fib that. All right. Now the whole thing is turning into a bigger correction, and we have double top. So you have to be aware of that it was a failure to reach the target. But that's how I would fib it, at least. Okay. At least wait for the target to be hit. In this case, we came very close to the 0 line, so maybe it would be okay. It's officially the 0 line, but it's a bit of a discretionary element as well, right? Because if we use this one, it's a 382 bounce to the target. Here it's a 786 bounce, double top. Let's see if I can get another example. Let's see. Maybe here. Let's see. 50% bounce, right, from this swing high, swing low, back to the 0 line. But I wouldn't fib this move down because we didn't reach the target yet. This entire movement is basically sideways range, right? So if we start fibbing within this move, it could be dangerous. What you could see is a bigger retrace to 618 and you lose that trade. In this case, not. If we would have fibbed this, it would have worked out okay. And then when we reach the target, then it's okay to put the next fib on, either to here or to here. And here we kind of missed the target though. So those are two examples, okay? So the AO I use for edit wave counting. I use it for fib placement. I use it for directional guidance. So what is a strong move? For example, here, strong price, strong AO, downside is likely. And I use it for corrections as well. If you get a strong down move like this, and then you get a correction like this, and this is back to the 0 line, then you know that the next break is a true break, most likely, not a false break. So those are the things I use it for. So the Aussie dollar, massive downtrend. We're building some base here. All right. So let's see. I think any move up should encounter resistance at any of these fibs. Just depends which fib will be used to make that downfall. But one more break, I mean, seems likely to me. We're back at the 0 line here on the 4-hour chart. On the day chart, though, we are bending here a bit after a strong move here. So we could see a bigger, a bigger consolidation period on this Aussie. It is possible. At one point or another, it's going to happen. The question is when? Now or after the next fall? If we do get a bigger consolidation period zone, then the next fall will be very interesting still. But then the next fall will probably have divergence, and that's when the trend to the downside might end, and we might see a bigger reversal. So let's see. If the fall doesn't happen soon, then we might, let's say the 5-day rule. So, well, actually, we already had 1, 2, 3, 4 days. So it actually would have to be today or tomorrow. Doesn't look like we're going to get it. So maybe the chances of that bigger correction is going to happen soon. We had a small break in here though, so I'm not sure how to count that. It could be more double bottom actually. Then we quickly count the difference in pips. 18 pips. You see, that's difficult. 18 pip break. It's already quite big. So maybe we have to reset our clock and say this is day 1, today is day 2. That would be more conservative. So let's see. We could get a bigger consolidation zone, and then any of these fibs would still see one more downside, in my opinion. AO is ready. It's back to the 0 line, so any fall now could be okay on the 4-hour chart. If we fall, 1-hour chart has been ready already a long time. Looking at the AO. Kind of making this corrective pattern. So we could fall from here right now. But the day chart is a bit concerning because we're kind of like bottoming here. If that is true and we make a bigger day chart consolidation, then the 4-hour world doesn't matter if it's back to the 0 line. We'll just keep on doing this, and we'll see this go up and down as well until we fall. So an important level for me because of that is really this bottom, this 4-hour low at 91, 96, 92-ish. If we break that low, that's a good signal of the downside, besides the trend line. That would be my confirmation. So I totally actually lost track of the euro and pound, to be honest. Was so involved here in the other analysis, but nothing really happened. Let's zoom into the 5-minute rule, otherwise we're 15. You can see here, double bottom, double bottom. As I said, I want to break, hook back, continuation, then I'll be interested. We haven't had anything of the sort, unfortunately. Nothing really happened at all since our session, and we've had a lot of those sessions, right? So I'm not sure if this is the best time, really. The pound is breaking, okay. Something at least. Let's take a look here. The pound, let's see. So probably the pound Swissing is doing well, yeah. Nice. I don't know if anyone took it, but it's moving down nicely. The pound is moving, it's breaking yesterday's low. That's a good indication. So any hook back and break would be good unless we hit the 786 already and bounce up aggressively. To me, the whole goal, the whole point of trading it is this 786 goal. So target. So if we already reach the target, then the whole thing is for me invalidated, and we're already getting quite close actually. It's a bit more impulsive break than I expected, to be honest. Normally we get breaks and hookbacks, breaks and hookbacks. You don't get many times that the pound crashes without giving some pullback after like 8 pips, or something like that. So to me, the idea is a bit invalidated. The idea I had in my mind, let me say it this way. You see there's only 12 pips difference to that 786. That's not interesting anymore. So to me, the whole thing is not really that interesting anymore. But it definitely could be downside still. I mean, well, maybe that's too harsh. I mean, it is definitely a downtrend. We are having bearish momentum bars. So if we get 2 hours of sideways move like this, something like that, and we stay under this level, that could be a good move down. All right, because we do have a lot of momentum in a downtrend. I don't want to overrate or overestimate these support fibs. They're small fibs. They're not that important either. So I think for me the key would be to see the next 2 hours if price can stay below, let's see what level. Let me take a look. If price can stay below this 54 for 2 hours, like that, there's a high likelihood that this move down is not false and is a true move, because if it doesn't, if it shoots back relatively fast, like this, and then does this again, this could be just a false move, just like this, and just like we had yesterday as well, by the way. All right, false move. This down was not a false move, but it didn't go anywhere after that. It just stayed in that range. So that could happen too here, right? We move up and stay in that range, something like this, right? We stay close to its average. But if we stay low in here for 2 hours from the moment we broke in here, which is now the 15th, the third candle, so still 1 more hour and 45 minutes to go, then the likelihood of it, making that next drop is high, in my opinion. All right, that's what I would be looking for still. Alrighty, well, folks, that wraps it up, I guess. Maybe not the most interesting day, I guess, but the pound Swiss was making a nice down move at least. Otherwise, the ones I liked a lot, like the EuroCAD, Euro New Zealand, Euro Odd, are not, doing what it wants. The Odd Swissy, by the way, just wanted to show you also pretty cool correction here. I like it. Something maybe along this line. So I would be interested in the downside, but it's moving to the upside actually, which ties in with the fact that actually the odd dollar, of course, is making that bigger retrace. So maybe that the odd Swiss and the odd CAD are not going to make that downside break. The odd is moving up. So those are not, I guess, as interesting as I was thinking they were. Otherwise, what else? The yens are stuck. Pound yen, maybe you're going to make that fall finally, who knows. Yeah, that's about it, I guess. All right, so Chris, are you in that pound Swiss then? You wrote I'm on it, but I guess you're referring to that pound Swiss? Guess that wraps it up really. All the breaks I really found interesting that were with the trend are not materializing. We're all getting bigger corrections, or we're stuck in huge sideways zones, basically. The euro isn't breaking, the pound is, but the pound is special, so I want to see some retracement and time factor before I'm interested. Otherwise, really nothing interesting. I mean, have to wait for those huge consolidation breaks like the pound yen type of formations and the pound Swiss, or see this EuroCAD. I like the EuroCAD upside, but I want to see, for example, a bounce right off this 382 here. Then I move back to this trend line, then see it respected, move back down, and then a break. Then I would love this trade right in here. All right. Okay, cool, Chris. Nice job. Nice job. Good stuff. Good catch from Chris. So I guess that wraps it up for today, June the 26th. Hope to see you tomorrow on Thursday, the June 27th. We're going to take a look at how the month and week of June is going to most likely end, and see how that maybe translates into July, August. But of course, we'll start as usual to see if there's anything intraday as well. Right? So I thank you too, Bogdan and Chris, for your questions, anyone else, and everyone else who participated with Q&As. Great stuff, like the interaction, okay? But I thank you all for being here, and wish you a great trading day and an awesome day. All right? Cheers.
The